In case anyone needs a reminder, here's what happened during FTX's collapse, which occurred over a 10-day period in November of 2022. The crisis began on November 2nd after CoinDesk published an article claiming that SBF's hedge fund, Alameda Research, owned a significant portion of the native FTX token, FTT, on its balance sheets. This caused serious concerns about FTX's liquidity. It became apparent that both FTX's and Alameda Research's liquidity were heavily dependent on the price of FTT, which had sunk in price along with the wider crypto market at the same time. Neither company was properly diversified, and they were far too closely tied together. Most of Alameda's funding came directly from FTX's customer deposits. What's more, the balance sheets showed $9 billion in liabilities, with only $900 million in assets, which equaled a negative balance of $8 billion. FTX customers began withdrawing their funds as fast as they could, which led to the crypto equivalent of a bank run. In an attempt to stem the bleeding, FTX blocked its customers from withdrawing their money. Even so, within a matter of days, FTX, Alameda, and the FTT token had completely collapsed. Binance swooped in to buy the flailing firm, but backed out shortly thereafter once it had taken a closer look at FTX's books. Reuters news agency then reported that SBF had secretly moved $10 billion in funds to Alameda Research, and that between $1 to $2 billion in client funds were unaccounted for. This led to further panic and also outcry, with many calling for SBF's arrest. So this brings us to the question, how much crypto does FTX still control? Well, the list of cryptocurrencies in the FTX bankruptcy estate can be found on the CMC category page, which I'll leave a link to down below. Meanwhile, on Arkham, the FTX entity currently has over $403 million in crypto tokens in its wallet. According to the recently filed restructuring documents, FTX, FTX US, and Alameda Research together still held $3.4 billion in crypto assets, out of a total of $7 billion in assets in recovery. According to the report, the bankrupt exchange estate consists of Solana at the top at $1.162 billion, then Bitcoin at $560 million, Ethereum at $192 million, Aptos at $137 million, Tether at $120 million, XRP at $119 million, BitDAO at $49 million, Stargate at $46 million, Wrapped Bitcoin at $41 million, Wrapped Ether at $37 million. Other smaller crypto assets that FTX controls are considered Category B tokens, which are tokens that fail to meet liquidity thresholds and or largely controlled by the estate. These comprise of over 1,300 tokens, including Serum at $362 million, Maps at $309 million, Oxygen at $164 million, Ronin at $6 million, Blur at $3 million. According to FTX bankruptcy filings, the exchange is seeking approvals from the court to sell $100 million worth of coins and tokens weekly, with the amount potentially increasing to $200 million. This is to minimize market disruption while also maximizing returns for its defrauded customers. The hearing is scheduled for September 13th. So now let's transition to the next important question, which is what other assets does FTX still control? Well, FTX's non-crypto assets consist of three different asset classes: brokerage investments, venture capital investments, and real estate. FTX controls $529 million in brokerage investments made up of Grayscale Bitcoin Trust at $417 million, Grayscale Ethereum Trust at $70 million, Bitwise 10 Crypto Index Fund at $36 million, Grayscale Litecoin, Ethereum Classic, and Large Cap Trust at $6 million, BlackRock Equity Fund at under $1 million. FTX's venture portfolio is valued at $4.5 billion and includes equity investments in 213 companies valued at $2.93 billion, and also limited partnerships with 40 companies valued at $732 million in investments, and limited partnerships with 40 companies valued at $732 million, investments in 174 tokens valued at $507 million, and loans to 11 companies worth $368 million. FTX's real estate assets include 38 properties valued between $185 million to $214 million as shown here. So it's important to remember that book prices for property don't necessarily represent recoverable value, only what an appraiser believes that they are worth. So what has happened to FTX since SBF was arrested? SBF was quickly replaced as CEO by John J. Ray III, a corporate restructuring specialist who oversaw Enron's liquidation after it too found to have carried out a massive fraudulent scheme. The investigation into SBF and FTX is still ongoing, but US law enforcement have already discovered that SBF used customer deposits to support FTX and Alameda's operations and investments, to fund speculative investments, to donate to charity, to lobby for positive crypto regulation, and to enrich himself. himself. Accordingly, he now faces new charges related to commodities fraud and for violating campaign finance laws. He has so far pleaded not guilty to all charges. SBF's bail was revoked after accusations of interfering with witnesses and is currently held in jail until his trial starts in October. FTX co-founder Gary Wang and Alameda CEO Caroline Ellison both pleaded guilty to fraud and other charges in December of 2022. Both are cooperating with the U.S. Attorney's Office against SBF and FTX. Meanwhile, FTX executive Ryan Salam has pleaded guilty to campaign finance charges and will be forfeiting $1.5 billion as part of the plea deal. The FTX fallout is already being compared to the Enron scandal, while SBF himself is now considered one of the great investment fraudsters, alongside the likes of Bernie Madoff. What happened to FTX's customers' money? Well, when you lend or invest your money with a bank, the money is insured by the US government up to a certain limit, but that's not the case with crypto. Whenever you hand cash over to an exchange or crypto company like FTX, nobody will bail you out if the company pulls the rug out from under the investors. So when FTX blocked customer withdrawals to try to save itself, the prevailing narrative was that investors would never get their money back, as is often the case in these kinds of events. However, the prevailing narrative wasn't quite right. By January of 2023, just 3 months after the peak of the crisis, about $5 billion of the $8.7 billion shortfall in cash and liquid assets had been recovered by FTX's bankruptcy lawyers. The lawyers also found FTX owed money to more than 9 million creditors. Even though FTX's lawyers had recovered substantial sums of money, the exchange's implosion is expected to wipe out the investments of most of its larger investors. By April of 2023, FTX's lawyers managed to find a further $2.8 billion in cash and liquid assets, increasing the total recovered to $7.3 billion. Commenting on the newly found funds, lead FTX lawyer Andy Detroit told Reuters that FTX had benefited from increased crypto prices. The situation has stabilized and the dumpster fire is out, he said. Even with this newfound money, however, FTX is still wrestling with a $1.5 billion shortfall. So far, only investors from Japan have been able to withdraw their money from FTX, thanks to the country's strong crypto regulations.